and welcome to this Bitesize Technical video on relief at source. Relief at source, or RAS as it's sometimes known, is the method of receiving tax relief on contributions used by all personal pensions, along with some workplace schemes. This is the type of tax relief operated in all the AJ Bell SIPs. Under relief at source, when an individual makes a contribution to their own pension, they pay it net of basic rate tax at 20%. The scheme administrator will claim the 20% back from HMRC and apply it to the individual's pension account. This means to get £100 into a pension, £80 is paid in and £20 comes from HMRC. The scheme administrator will make the reclaim on a monthly basis. Depending on when in the month the contribution is made, it can take between 7 to 11 weeks for the tax relief to be applied to the account, although some schemes do pre-fund this. The tax relief will always be applied at 20%, the current basic rate of income tax, regardless of the tax rate the individual actually pays. Anyone that's paid tax on their earnings at a rate higher than the 20% can claim the extra tax back, but it's important to know that those that pay less tax don't have to repay the difference. So although the basic principle of tax relief on pension contributions is that you get back the tax that you have paid, there is an anomaly at the lower end of the scale. If someone makes contributions that tax isn't due on, i.e. within the personal allowance, then they still get the 20% tax relief under relief at source. For example, someone with £20,000 of earnings who made a £10,000 contribution would get 20% tax relief on all of it, not just the part above the £12,570 personal allowance that they've actually paid tax on. To do this, they would only need to pay £8,000 into their pension, known as the net amount. HMRC would then pay in £2,000. Under relief at source, personal pension contributions can be made up to 100% of UK relevant earnings in the tax year the contribution is made. There's also a basic amount of £3,600 that any UK resident under the age of 75 can contribute and get tax relief on, even if they have no earnings at all. £3,600 is the gross amount, so non-earners can actually pay in up to £2,880 net. Also, any Scottish taxpayers who pay the starter rate of tax, currently at 19%, don't have to pay back the 1%. When it comes to claiming for higher taxes paid, most people will do this via their self-assessment. For anyone who isn't registered and doesn't have to complete a self-assessment for other reasons, they can contact HMRC direct. The exception is additional rate taxpayers who will always need to complete the self-assessment to get the extra relief. On the self-assessment form, there's a section on paying into registered pension schemes. On here, it's the gross amount that should always be entered. For example, if in the tax year payments of £8,000 have been made to the pension, this is £10,000 gross, so you'd put £10,000 on the self-assessment. Once HMRC have the information, they extend the basic rate tax band by the amount of the pension contribution to work out the tax due for the year. For example, someone with £80,000 of earnings would usually pay £19,432 of income tax. The first £12,570 of earnings are tax-free, as this is within their personal allowance. The next £37,700 is subject to basic rate tax at 20%, and the remainder of their earnings, £29,730, is subject to higher rate tax at 40%. However, if they made a pension contribution of £32,000 net or £40,000 gross, they would only pay £13,486 tax, as the basic rate tax band would be extended by the amount of their gross contribution. This means the £29,730 of their earnings that was previously subject to higher rate tax now falls under their extended basic rate band. In this example, they would claim back £5,946 from HMRC. This is £19,432 minus £13,486. One final point to remember. If the annual allowance is exceeded in the tax year the contribution is made, although tax relief can and should still be claimed on the contribution, additional tax charges will apply. We cover annual allowances in more detail in separate bite-sized videos.